Hi everyone, Liam O'Brien here from Total Trader. Today I'm going to run you through May's update of the market. So we'll have a look at the actual current markets and some global markets and the conditions, and we'll also look at the May asset allocation. Any advice in this presentation is general advice, and it's my own personal views. It's not any trading recommendations or anything like that. So if you do have any questions about trading, please do email info@totaltrader.com.au. Right here in front of us now we have a chart of the All Ordinaries. Now one of the first things I've been watching on this chart is January, 7th of January made a high, and it's only this week, last week and this week, that we've actually taken this high out. So we've actually started trading above that high from January, so we're at yearly highs now. This is a major point that from coming out from the low, that we had to take the previous high that was the established high before we ran into the low. So that gives us good confidence. We have taken it reasonably well. The 3-day rule, 3 consecutive closes above the most recent high is holding, which is giving us a good sign. Look, I don't think we're totally out of the woods yet, but we do have some positive momentum, and I'll give you a case for this too. One of the ones I do keep a fair bit of an eye on here is an advance and decline in volume. And what we've got here is the blue line being the advance and decline in volume, and the red line, which is an 120 period average of the advance and decline in volume. Now this here in March was the first time that we had crossed back above the red line convincingly since May 2008. So what that shows us is there's actually buying. With the buying that's coming into the market with this rally, there's actually volume behind it. Whenever you have a rally with low volume, be concerned, because it's showing that the market's moving up, it doesn't have the push or the steam or the volume. But particularly in an upward market, you really need the volume. Downward markets are a little bit different. You can have bear markets or falling markets with low volume, and they can continue to fall. But if a market's going to move up strongly for a period of time, it must kick off on good volume. So we have seen the volume starting to kick, and even looking at just that advanced decline, it is starting to trade at some levels it hasn't been at for 6 months, which is showing that the volume going in the right direction. A couple of other indicators here, the MACD and the MACD and the momentum are both positive and have been positive since March too. So that's quite positive there on the XJO for the daily chart. I'll just quickly jump across to the weekly. And the main thing here, I've got here what I have a five-day swing line, this green. Now what this does is shows me on the weekly, it's actually a 5-week swing line. It shows me it has to move in a direction for 5 consecutive weeks to be able to turn this green line. And virtually the whole time in the bull market for 3 years, it just went straight up. Then it turned in round 07, 08, turned and went straight down. Now it's turned up. Now generally you will find that unless it's actually a trend, it will not move this green lines. Hence why when we had the full bull market, didn't move it down once. Even all these pullbacks didn't turn it down. So, and even with this rallies that we had here in 08, between say March 08 and May 08, it didn't move this one up, but this time it has. The other thing too to notice is, I'll blow it up a little bit, is we've got here this other 2 things here. The darker blue line is the momentum. So this is the first time in the last week or so that our momentum's actually turned positive since January 08. So we're talking about 1.5 years almost since it's been turned positive from being in the negative. So that's a good sign there on the weekly. Additionally there, same with the MACD, is also turned positive. So we do have quite a few indicators here in both the daily and the weekly telling us that this market is actually showing some underlying momentum and strength under it. Now let's have a good look at the S&P 500 out of the States. The S&P 500, similar sort of positions to the Nikkei, is not trading at yearly highs. Obviously the US has had a lot of its stress tests. The banks came out overnight and had mixed results of that, leaving the Dow down about 100 points. But it's come out, made a low there in March, and it's come back up and it's retesting these highs up of January, so it hasn't made a yearly high. But some things to notice here. The momentum seems to be, the darker blue line seems to be coming off. Even though we are going to new high, the momentum's coming off on on the actual S&P on the daily chart. So not as convinced on in the US compared to Australia and Asia, but is doing a few things right. Just needs to clear this old high, and I think the momentum will tick back up, and then you'd say it's definitely a little bit further out of the woods. But right now my concern is that move up there doesn't seem to look like it's got a lot of push behind it, and particularly this momentum showing us that it's pulling back. Just jump across to a S&P 500 weekly. This is actually looking a little bit better than the daily if we just look at a few technicals on here. We can see the green line, same case as the All Ordinaries, has the 5-week consecutive move up. This line here has turned positive, so that's the first time since this down move. So we're talking about moving down from October 07 into February, March this year, and this is the first time it's actually turned positive there. Additionally too, when we look at a few of these other indicators here, if we look at the momentum around November 07 went negative on the weekly, and virtually came up and tested in August, but didn't quite get above the back above 100 there. Whereas we look, then it went quite negative down to some very, very deep. But then it's right now, it's actually the first time since basically the top, it's actually started trading positive, being the momentum, and it's the same with the MACD. So we do have a couple of indicators there on the weekly which are proven to be quite good. So what I'll do now is just quickly run you through the asset allocation for May. In terms of the global equity risk continues to rebound from its lows. We have seen global equity risk basically go to historical lows over the last 6 months, but it is starting to rebound from those equity risk lows. The recommended portfolio from month to month in April gained 10.6% in local currency terms. So this is the asset allocation model I told many of you about last month. So we made 10.6% in local currency terms. Just to give you a breakdown of that asset allocation model, the main reason the model for May reflects the extraordinary low risk that we see in the equities. It keeps a bullish bias towards stocks. However, last month's equity rally has now left the stocks tactically overbought, explaining why the total weighting of the equity portfolio has dropped 2%, so it's dropped from 70% to 68% for this month. I'll just give you a breakdown of that. We're looking at, of the 68%, 16% allocated to the US, 3% allocated to Canada, 2% allocated to Japan, 2% to Australia, 4% to New Zealand, 2% to Germany, 1% to France, 1% to Switzerland, 9% to Sweden. The big allocations of this, and this is hence the pretty good performance we had last month, is we do have a total here of 18% in emerging Asia and 10% in Latin America. So that's given us gives us our total of 68%, but our biggest weightings are definitely between emerging Asia, Latin America and the US. And also we're sitting in cash and bonds of 28% for May is the suggested portfolio, and the CRB futures we have an exposure of 4%. So that wraps it up there. In terms of, if you want to find out more about how to trade this, how we trade this actual asset allocation model, or how you can apply it to your investing, please don't hesitate to contact Eden or myself. We can be contacted on at info@totaltrader.com.au or give us a call. That's it for now.